Hello everyone, this is today's video analysis for September 23rd, 2019. Today, we're taking a look at the USDJPY, the US dollar versus the Japanese yen. For today's trade analysis, two different trends really here on the daily time frame. The red trend line, of course, clearly a long-term downtrend as the market fell from all the way up here into the 112s down into the 104s down at the bottom of the chart. Since reaching that low, the black trend line shows the market's been in somewhat of a correction or pullback as the market has pushed back from the mid 104s, now back capping highs into the mid 108s. In the past few days, though, we've seen the market pulling back down again as the market struggles to find its trend direction. We see it, pulling back against the rising trend, the black trend line, but not really continuing that fall as it falls now down into support. This orange shaded area, bottom of this black box you see here, the orange shaded area 107.55, 107.35, holding currently as our support and has for about a week or so. We've seen historical support into this area before. Let's just draw out a circle. And you can see historically we've seen support here before. So we know that we could find support here. The market has factually found support into this orange shaded area before. So we know it's a clear decision zone for the market. And we also know that if it were to successfully break down through this orange zone, the market would likely push it back down towards the 107 level. The green shaded area is just under the market. Why? Because if you look to the left of that black circle, you can see that's what happened back here. So we have a defined decision zone for the day today, right here around this orange shaded area. Either it's going to hold it like it did last week and bounce off there and go back up, or it's going to break through there and turn lower and continue the pullback or retracement here from the past 3 days. A couple of other things here just to make note of here on the chart. 100 period moving average is the green line. We can see we've been struggling a little bit above it, a little bit below it. So we know that we're just struggling around that moving average, trying to define direction for the dollar yen. Will it turn higher? Will it turn lower? We don't know quite exactly yet. Of course, the black trend line, we are underneath it, but remember, if we're going to define a change in direction, we want to see lower highs and lower lows, and I don't think we can define that yet. This could become the next low point within the uptrend. We just don't know yet. Only a break of that orange zone underneath it, I think, would define the continuation of a downward trend. Fibonacci from the bottom of the black trend line to our most recent high puts the point 0.236 fib at 107.52. That's top of the orange zone. 0.382 fib, 106.94, bottom of the green zone. So now that confirms the green zone as a support zone for the next push lower if it were able to break through the orange shaded area. 50% of that black trend sits at the pink zone, and the 0.618 Fibonacci retracement level lives all the way down here at the yellow zone. So we clearly have some downward points of interest with Fibonacci and the historical support resistance levels. Now on the way back up, Fibonacci is a little bit different. Let's actually take a couple other fibs. Let's go from the top of the red trend line down to the lowest low. And interesting here, and it's kind of tough to see it because we have that other fib there. But if I move it around a little bit, the 382 Fibonacci retracement level of this red trend line settles out right here at the orange zone. So now we see an overlap of fibs right here at the orange zone. So we know that red trend line and the black trend line now have Fibonacci surrounding that orange shaded area, two dash blue lines in there. Isn't that interesting? Some fib here or retracement level here at the pink zone as well. And if it continues to go higher, 618 of that red trend line sits up here at the yellow shaded area closer to the 200 period moving average, interesting enough, at 109.1530. So there's some overlaps of fib there. I would say probably here at the pink zone as well. Nothing here at the blue zone. That's interesting. Let's take one more just for kicks. Let's go from this high right here at the yellow zone, last significant high we see there, down to the low. And interesting enough here, 618 of that range sits right here at the orange shaded area as well. So we're seeing some overlaps. Look at this. If you really take a look at Fibonacci, we're seeing some overlaps right here at the orange zone, right here the green zone, right here the pink zone, right here at this upper pink zone, top of the black box. So we know there's a lot of significance around these levels. Now that we know that, we make a trading decision. We come down here to the 4-hour time frame. Either we're going to look for a reversal to go back up here, or we're going to see the continuation lower from the orange zone. Waiting for the setup is what I'm going to do. I would like to see, let me zoom in one time. I would like to see the market get, have an infusion of buy orders. That's typically what we talk about in the trade room. We're either looking for the market to get underneath, successfully break underneath that orange shaded area, or we're going to look for some sort of infusion of buyers, some candlestick structure that implies buying pressure from this orange zone. That might be what I'm looking for. So this waiting for one of those two things today for the dollar yen will be our trading actions for the day.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.